We have this industry that we've all worked to build for really the last decade or more. I think what large portions of what we've been building are just straight up changing. The mantra for 3 years was survive till 25. We got here, and I think we're all looking at a potential knockout punch. We're shifting to now is this back to basics is really, it's all about deals. Establish a connection with somebody first. Don't underwrite first. I don't even know what a list price means anymore.
The job of investing in real estate used to be very property-centric, and right now it's very people-centric. It's not about looking at a piece of real estate on a spreadsheet and figuring out the price and the cap rate. The first place I need to start right now in order to know I can make a deal happen is with the people. I got to a point where I was able to scale my business pretty well to a pretty high level of volume, and now it's kind of gone the other way. The more I try to scale, I'm getting less traction than when I'm like, screw it all, I'm focusing on this market, on these few buyers, because I want to get a deal done this quarter.
This time it's really like stick around, be thoughtful about what you're doing. We're just around the corner from revenue. I truly believe at some point that lack of clarity is going to expose some paths and some opportunities.
Hey, this is Adam Stern and Ted Farry with Ted and Adam Unleashed on Everresi Media. Ted Farry, how you doing, man?
I'm doing, my friend. Good to see you. Good to be back here with you on Everresi.
Good to see you too, man.
I think we have a lot to talk about.
Yeah.
Probably a little bit of a different topic than we've covered for a while here.
Well, I wanted to be honest on this podcast because I know you for a long time, and I know the industry that we're in has been going through some very subtle, very noticeable shifts. And instead of just talking about kind of theoretical market shifts and theoretical things, I wanted to get a sense and get a sense of what you're going through as a professional in the SFR industry and kind of sound off on what my experience is. Because I don't know if you agree, man, like having a real conversation about the real nuts and bolts of what professionals are going through in the SFR business and build for rent business and largely in the real estate business is an interesting topic to me because it resonates. And I wanted to have this very real conversation with you because I know you're in the same boat as me and a lot of other people out there.
100%. I mean, we have this industry that we've all worked to build for really the last decade or more, probably closer to 15 years at this point. And I think what large portions of what we've been building are just straight up changing.
Yeah.
And I think the mantra for 3 years since interest rates rose was, survive till 25. Well, we got here. And
what now?
I think we're all looking at a potential knockout punch, but I don't think it's that dire. And I think that's really one of the main things I think is really valuable for you and I to talk about or talk through here is that, yes, there are changes, but I don't think that these are mortal changes.
Well, let's talk about the changes because, actually describing them has been a hard thing for me because they've been so subtle. But they're really noticeable. And I guess the way I see the industry change or that the industry has changed is the signals that I see from people that I know that are in the industry, like acquisition guys that were always acquisition people that were in charge of acquiring for large scale funds or medium sized funds. Now they're looking for new jobs because their fund's not acquiring anymore. Or people that were somewhere on the capital deployment side are no longer on that side because capital is no longer being deployed by the people that they work for. Now they're shifting. So it feels to me because I know people and I see them shifting around and I feel it because, listen, I'm a broker and I look at, the landscape of people I used to sell pretty steadily to, and they're not buying the same way that they used to. So my job and my segment has changed too, because, the old way of doing things don't seem to work anymore. So I just kind of felt this shift over time where people are being displaced. The foundation of the industry that was built on capital deployment and scale has shifted to more nuance and more bespoke kind of ways of looking at bespoke deals and ways of looking at them. And it just seems like more localized right now. And everyone that did things on a larger scale and got really good at doing things on a larger scale, that way seems to have passed us by into this new shift, which is, I don't know what, it's hard to describe, but it's definitely there,
Right. Well, yeah, I think, it's subtle. There's a lot of subtlety to it, but there's also some really not subtle things. I mean, I think what we're faced with and what is really getting challenged from a volume perspective is that the political environment is challenging, volume at all. They're saying that we don't want large owner of homes.
Yeah, yeah, but is that really, is that the whole reason why it shifted, right? Is, think about it. Like when the industry started, like in the late 2000s, early 2010, when it really took off, there was massive distress in the market, and the capital saw a really easy way to deploy lots and lots of capital to buy homes at very low prices when interest rates were very low. And then kind of over time in the mid 2010s, interest rates are still really low and housing prices historically were still really low, but rising. And then like you fast forward to post-pandemic housing market, we have relatively high prices, relatively high interest rates, and like the foundation upon which this industry was built is no longer kind of, it's still there. The capital's still there. The assets are still there. But like the opportunity is completely different today than it was 2010 all the way through the
Right.
teens and even post-pandemic.
Well, yeah, and I think that we've talked about this in the past, even on this show, is that in that first wave coming out of the pandemic, or sorry, coming out of the downturn, it was really about buying great homes at a discount. In the second wave, it was really about no change to the buy box.
Yep.
And it was buying that same set of homes without a discount, but with cheap capital.
Right.
And then in the third wave, the opportunity was less obvious. And I think what's happened this year is that it's become even less obvious.
That's obvious. Yeah.
And
Yeah.
right. And it's really, from some sense, it's back to basics. People were investing at a multitude of levels, not as large as they have been in SFR for decades.
Yeah.
And I think that that's what, as an industry, what we tapped into, that experience that we tapped into in terms of, more probably some, light investor type of rental stuff, but really a lot of flipping experience from acquisitions. And what I see is that that's starting to dominate the market again.
Yeah.
And maybe it really never went away. I think in the past,
I think it was always there. Yeah. I think it was always there. And we got so kind of like drunk on this easy capital coming in, where if you found something that fit the capital, you were going to make a ton of sales and have a ton of activity. And that old guard was always there, like the local house flippers, the local people that keyed into a nuanced strategy that didn't require a lot of capital, and it really wasn't all that scalable, but it was something that was in every single market. And then like the big institutional investors came in with one big strategy, and everyone kind of glommed onto that. And now I feel like it's cut the other way. Like you said, like it's back to basics, where like for me, I can no longer find a deal with, kind of like a set amount of parameters and know I can bring it to a big capital stack.
I talk about that with my team almost every day now.
Yeah.
We built this platform. We built our team to do exactly what you talked about.
Right.
This was really, it was almost more of a processing role, where it's a very set buy box. If something hits, then go through all the steps to do your underwriting, set your price, and make your offer. And what we're shifting to now is this back to basics is really, it's all about deals. Deals.
Yeah.
I feel like a broken record on all my team calls recently, and that it's like, establish a connection with somebody first. Don't underwrite first.
Yeah.
Go and see what the actual deal is. A list price kind of means, I don't even know what a list price means anymore. I think that there were some set parameters. I think we even talked about on the show, maybe a 10% discount to list is kind of, a potential strike zone.
Yeah.
But we're getting back from people. We come in at 90% of list price, and we don't even get a response.
Yeah. Yeah.
And so there's a really, I could say a funny dynamic, but it's not really funny. It's just, this is the back to basics. You have flippers and markets like Indianapolis they're bidding up properties again, sight unseen. But the awkward thing happening is that everybody says, oh, the institutions aren't buying, the capital's not there. So everybody expects that there's going to be these discounts in the market. And so the story is telling itself, look, the institutions are not buying right now, and prices are actually I think, going up from from what they were doing last year, at least in particular markets.
I'm looking at it in terms of like what you explained. I can kind of describe it as the job of investing in real estate or brokering real estate or financing used to be very property centric. And at least for me right now, it's very people centric. And it's not about necessarily looking at a piece of real estate on a spreadsheet and figuring out the price and the cap rate and all these different financial metrics. The first place I need to start right now in order to know I can make a deal happen is with the people. And, you know, on the seller side, that means understanding like seller motivations more, why they're selling, what makes the deal palatable for them at, you know, a certain price level, or what the execution needs to be. And I didn't have to do that as much back in the day. I kind of looked at the spreadsheet. I'm like, this is what you're going to get for your property. It was usually a really good price. And their personal kind of story didn't figure a whole lot into it because the pricing was so attractive that, you know, most sellers, you know, just made a decision to move ahead without a whole lot of discussion needed to be had about their personal and their
There's a robust set of buyers and sellers.
Yeah, exactly.
So
right.
you're playing much more of a middleman. Again, back to more processing. It was very established. Pricing was very established, and you know what people wanted, and then what people would sell for. You know, then they have to make the decision if they wanted to sell into that box, right? And I think, you know, the landscape has changed so much where it's like we have to do it's a less obvious opportunity, and that's really where I see things going from here. Is that we have a period. I think we were already in a period last year with larger capital available still, that we needed to go through this kind of exploratory phase and figure out what the opportunity set was for that capital. And now that that's been taken away, it's a different set of capital, and we have a whole new exploratory process to figure out, you know, what is real estate investment, what is, you know, institutional real estate investment going forward.
Yeah, I feel like that's half my job now, where, you know, if I look at all the buyers or the people that I consider buyers in my database, figuring out who's buying what and where and how is the only thing I can do, because it used to be I knew a big group of people were buying one set thing at one price in certain markets and it all fit. Now it's like it's fragmented and the money's still there, the capital's still there, but lining up deals to that capital requires a lot more kind of thought, less processing and more like nuanced thought, right? It's like, you know, what are the motivation on the sell side? What is the strategy on the buy side? Where are they getting their capital from? How are we going to look at a deal? And from what lens? Is it going to be a macro lens where they like the market, you know, the fundamentals, or they're looking at more like micro things, you know?
What does that look like? What are people looking for right now?
I think it's scattered across the board. Like if I look at my pipeline of buyers, I have people that are looking in, you know, certain geographic territories like the Southeast. They don't care if it's Charlotte or Georgia or Tampa or Orlando. But as long as they get a very specific, and it's even more specific right now, because they're not only looking for asset types, they're looking for things like distress or sellers exhibiting certain sell signals, like they have a outsized amount of equity tied up in a property, or their financing is coming for at the end of it's coming up for refinance. It almost needs to be a project has to be good, and it also needs to have a story behind it that makes a buyer understand that there's an actual real need and motivation on the seller side to pursue a deal.
I think what you're saying is that you have to actually do some selling. Doesn't just sell itself.
It actually requires a bit of intelligence and thought, not only just finding, hey, there you go.
This is crazy. Somebody in real estate has to do sales.
Absolutely. And it's not so much salesmanship. You know, it is salesmanship, but being able to analyze a property and understand not only like how to analyze a cap rate, but understand like, you know, is the renter demand going to be there? How fast the rents are going to be absorbed into the market? What's the differential between, you know, retail value and the value at a certain cap rate?
How does that look in like a place like, you know, Tampa, Orlando, which I feel like has its own dynamic going on, versus Charlotte and the Carolinas that have never, you know, had any slowdown, I don't think.
Yeah. I'm seeing it in markets like Southwest Florida, right? Lehigh Acres and Cape Coral out there, where like prices have, like, according to Zillow, have come down like 8% over the last year, and rents are kind of stagnant. And there's distress there. If there's not yet, there's going to be, and you can kind of feel it in the air because I keep seeing portfolios in that market region.
Cape Coral.
Right.
Yeah. When was the last time you pulled up Zillow and did a comping of any neighborhood in Cape Coral? What I see is that when you have a lot of listings on the market with high day on market, and the mix of those listings is not only lots, but not only houses, but also lots.
Right.
Like, that's not a good sign.
So here's a question for you. If there is distress there, shouldn't there be buyers there that recognize that and want to pounce on it? Because, that's what investors do. And I'm having a hard time, like, especially when I see portfolios in that area of the country, finding a willing buyer base that's actually interested in underwriting, because their response is like, the area is not doing that well. Prices are coming down. I'm kind of a no-go on that area. I would think it should be like, hey, this is great. I could probably get a better deal than I can in a Charlotte or a Dallas or a Houston, where distress isn't that great,
Right. Well, I mean, again, I think we're back to basics. We're getting back to a more typical market for real estate.
Yeah.
Where it really is about what's happening locally in Florida and, kind of, Southwest or Central Florida, however you characterize that. It's really interesting is that there's a big difference between Tampa, Orlando, and there's Cape Coral.
Yep.
What I think, why my view on why people aren't just plowing into Cape Coral right now is that I don't know if there's really any sight to the bottom. I think you had a lot of migration, very positive migration stuff that was already happening, but really got amplified by the pandemic.
Yeah.
And so that drove a lot of folks to go out and just bring a lot of supply to a place like Cape Coral.
Yep.
And, really, I think it ended up being an oversupply of units coming on the market. And then at the same time in Florida, everywhere in Florida got hit with this, but particularly in that area, is that along with that oversupply, you had a couple really big hurricane events. And separately, you also had, separate but related, you also had some insurance, issues.
Right.
So all of those things plowed on to Florida in general, but those areas really got hit on an acute level from that hurricane activity, and then Cape Coral specifically because of supply.
Yep. So one of the things I wanted to talk about, is the middle market, because I consider myself a middle market player. I'm not on the retail, like, lower end side, or like, shouldn't say lower end. I'm not on the side where I'm selling small individual homes to retail buyers, right? And I'm not on the huge institutional side where I'm making deals that are like $40-50 million. I'm where most people are. I'm trying to make deals between like a couple $1 million and like $10 or $12 million. And that's my sweet spot. And it seems like the institutional players are all playing with each other. Institutions are buying from builders en masse. They don't need a broker to do that, and they don't really use intermediaries. And that business is kind of beyond me. But I'm not really a small deal player either. I'm playing in this middle market where I think a lot of people, like, not only in brokerage, but also in asset operations, dispositions, acquisitions, they play. And what happens to us in this market, and what do we do? Like, how do we actually take our skill set that was geared toward scale and velocity and deployment of capital and allocate it to the new reality, which is more of a, according to you, back to basics, a localized kind of view? Like, my thought of it is I almost got to get really, really smart on a very small group of buyers in a very particular market. Mine's Charlotte. So, like, that's a natural fit for me. And, like, how I've shifted my business is I stopped looking broadly at, the entire United States to try to find a deal that might fit the biggest players. What I shifted to is, like, get to know a very small group of very active buyers that have nuanced strategies, and then use those, demand signals to figure out, all right, where do I need to look for that inventory, and how do I grab hold of it and show it privately to the right buyers? That's the only thing I can think of, because
Are those, well, right. And I think, you hit on a few things there. I think, for one, the middle market is where this industry transitions to.
yeah,
I think it's very, very clear that the large capital is I actually don't think it goes away. And maybe I'm touching on a different topic here, but what I think we're seeing is that you have a different calculus for established capital that's been in the market. They're already in bed with the risk that's out there. And then you have, versus new capital. I think with new capital, it's a difficult equation to solve in getting comfortable with this risk if you're not already in bed with it.
Right.
I think, those existing players, it's much more about timing. I think we're going to things have been stalled out for a little bit here. I think that, pretty soon it's, the longer that things go, I honestly don't think, I think it's very low probability that nothing happens here, but something will happen. But the longer that takes, the more kind of like that this whole thing falls in that noise bucket.
Yeah.
And so then it's just a matter of time before these groups are, look at it and say, hey, well, we already have this risk. And, how do we protect ourselves against the worst case scenario, but also take advantage of this opportunity where we should be able to go deploy.
Yeah. I keep coming back to knowing all the middle market players that I know that work for large firms and even medium-sized firms. And now they're trying to figure out, either they're at the same firm and they're trying to figure out what their place is, or they left their firm because they're no longer active and now they're looking for a new spot.
And so are those firms, are they like multi-market buyers, or are they just single market buyers? Because I think that's another distinction that you could make, right? Because the local guys are hyper local. And I mean, in your business, do you work with even if they're middle market, but just a single market buyer much?
I work with firms that I always knew as multi-market buyers, but I'm generally doing all my business with those firms in just one market, right? So
they know the market really well.
They do, and
they have the ability to buy other places, but that was probably more through expansion to try to grow.
Yeah,
right?
I go crazy with it, Ted, because whenever I come across an opportunity, I'm now looking at through the prism of, all right, I know this very small group of buyers that I know are highly active. And I kind of look at it through that prism. Does this deal fit one of these buyers that I know really well? And that's a shift, because I used to look at deals through the prism of, if it fits this box, I've got 20 buyers to choose from. And it changes the way that I source and the way I go out into the market and talk to sellers. And it kills me, because I've been trying to scale my business forever. And I got to a point where I was able to scale my business pretty well to a pretty high level of volume. And now it's kind of gone the other way, where the more I try to scale and be kind of like the jack of all trades, meaning doing business in a lot of different markets around the country, even though my vertical's pretty niche, SFR, built for rent and land, I feel like I'm getting less traction than when I'm like, screw it all, I'm focusing on this market, on these few buyers, because I want to get a deal done to, this quarter. And whenever I kind of hyper focus on a single market, on a single asset type, and a very small, maybe 2 or 3 buyers at a time, it's easy. It's a lot easier than having the broad brushstroke of just finding anything that fits this parameter. And I think a lot of people are probably going through the same thing, right?
I was just going to say the same thing. I think that's a really important point that I think could be helpful to a lot of people, is answering the question is, what do you do now?
Yeah.
Whereas before it was kind of, you just have to, there was such a broad array. It was kind of just sprint in one direction, and it's really about how fast you can move, not really how well you move.
Right.
Where now it's coming back. And so I think that's an interesting thread to pull on. How do you choose that handful of buyers that you work with? Is it just who's active, or is it, there's some specialty that you can define that, where you're differentiating yourself versus another broker or another platform?
Well, this, you've been on the principal side forever. And I think, in my business, it's getting to know the people behind the money, right? The people behind the strategy. How motivated are they to actually implement whatever strategy they're doing? Do they know their strategy really well? And can they explain to me how they're capitalized and what their process is? There's a qualification process that I kind of intuitively go through. And the first time I talk to a buyer, that includes, me getting comfortable with them as a person, wanting to like them and being able to get along with them, and them being able to articulate well enough what their strategy is and where they're getting their capital from and what their process is of deploying that capital. And then once I kind of get there with a buyer, and I understand that they have intent and they have ability, it's all about whether or not I think I can actually identify the kind of sellers that they're interested in talking to. And a lot of the time their strategies are just fine, and I like them and they can explain their strategy. And a lot of times, all the above is great, but they've got this strategy that seems so either out of tune with the market or just so nuanced that I start to doubt if I can find the right sellers, right?
Right. I mean, I think a lot of people in your role, they do have to do a lot of education, especially when new capital was coming into the market. You probably spent a lot of your time, for like coming up with analysis, providing data. It sounds like what you're saying is that maybe there's less education. It's much more about working within the bounds or the specific strategy or the thoughts and analysis that this existing platform already has.
Yeah. I feel like that's it. It's like when I go deep with a very small, even an individual buyer, and I focus on that strategy, that market, that asset type, and I just kind of blur everything else out of my mind. I say to myself, I know there's a ton of business going on. I know there's a ton of opportunity that's just flying everywhere. I almost got to there are like a bunch of gnats flying around my head. I got to pick one and focus on that one because then I can get a deal done. And if I don't make that decision to get granular, focus on a buyer, focus on a specific deal, I feel that intuitively, right? I feel like time goes by and I don't get deals done. I can actually see it in my output at the end of the month or the end of the quarter. Months where I focus and I'm very particular about who I'm sourcing for and who I'm pitching deals to, and months where I'm more broad stroke and I don't get that granularity. And it shows at the end of the month with the amount of transactions I'm able to get done.
Right. So you talked about the, talent migration in the market, and, there's, I think as an ACT person, it's, there's been a lot of dislocation. How do you view your activity today and your strategy in terms of staffing?
It's tough. A lot of people want to get to work, especially in the SFR industry. They're used to being busy. They're used to being employed. They're used to being sought after. And now, I feel like there's a place. I try to find a place for those people in my world. And my world is, arm's length, 1099. You produce, we work together, you can get paid. But it's the funny nuance in the industry where a lot of people that come from companies that need a W-2, that need a set salary, that need benefits, I don't know what to do with that. I have a very hard time taking the leap of hiring people in that respect because I don't know what the market's going to do from month to month, quarter to quarter. It's scary as shit for me to make a W-2 hire knowing I'm committing to a 6-figure salary throughout the year. That person needs to basically generate 4 times that, and whether they can is a big question mark, right? So it's been really tough.
I don't think you're alone in that. Yeah, I don't think you're alone in that. Yeah. I think that this is where the market's headed and where things were. I mean, again, going back to that processing versus deal making, I think if you're building a processing platform, which is really required to buy high volume of single family rentals, you need people that are there to execute the plan that you put together. And so it's, like a W-2 person or something, with much more of a fixed set salary is a much better fit because, there's a lot of things that are required to get those deals done, whether it's pricing, providing color, providing analysis to investors that they may not be able to get paid off something every day. Right. But today it's we don't know as business owners and managers, we don't know we're going to get paid. Right. So everything has to.
Yeah, it's a big question mark.
An actual deal happening, right?
Yeah, and that's the big shift. It's like the industry people that I know that have always worked for companies that have run this process. Those companies, some of them have gone away, some of them have shrunk. Some of those roles are obsolete right now because of one reason or the other. Either technology replaced it, or the market is just not there for them to continue on that. And I feel like I'm pretty safe on my side because I just got to find deals that work. Buyers that want to buy, sellers that want to sell. But I feel this great unsettling that is happening right now. And I'm kind of looking at it from the outside thinking I'm glad that I've gone down the route that I have where my income has never been guaranteed. It's always been based upon, going out there and finding and killing something and dragging it back and, filleting it up. the shift that I'm seeing, and I can see it very clearly with people being displaced from process-oriented jobs where they had to, they fit into a machine and that machine did a very specific thing. And either that job went away or their firm went away or something shifted where that's no longer available. And now they're out there looking for another process-oriented job with the safety of a W-2, with benefits and all the things that come along with that kind of role. And, I look at it from my perspective, and I've always been out here at arm's length, doing what I do without any guarantee of income, benefits or anything like that. And I think in this market, there's probably more opportunity for people that are on the outside. They're able to identify value, find a buyer, find a seller, find capital, find a need for equity, whatever the situation is. The opportunity is certainly there, but like the shifted mindset, people that are been in this process-oriented side of the industry, I think have to make is not looking for another one of those process-oriented jobs, but actually using their brain, looking at the trends, picking a trend that they see and they believe they can affect, and then figuring out how to apply their skill set to that trend. I feel like if people can do that, like I've been doing, sometimes well, sometimes not too well, they'll be able to find these little niches that, there are real needs out there and there are real opportunities to make good money, but it's not so safe, right? It's not as safe as a job where you're making a base salary and you're on W-2 with benefits. It's more, you gotta kind of take the leap and pick an interest of yours, pick a segment, a market, an asset type, an area that you can actually look at and say, there's a need here. And I think I could actually get something done if I approach it in the right way.
Everything has to be tied to revenue. And so I think what you're describing, Adam, is really that you have all of the things that go into getting to that revenue: specialty, deal making. I think, one of the things that is this classic comment from you that I'll never forget is that when I left working for the True family, that was a pure W-2 role for me. I remember I left there and was out on my own and doing consulting work, and you're like, hey, Ted, you're now an outside cat. And so I think the opportunity for a lot of folks in the industry now really is outside cats. You're really out there. You've got to kind of find your own, and not that the platform opportunities completely go away, but I think everybody's got to shift to that mindset, where it's much more closely directed or tied to actual revenue for the business, whatever business it is that you're involved with.
Yeah. I think the natural shift for a lot of people on the acquisition side, the people that built networks, a lot of people are going to lending. So I've seen like an explosion of people in the lending business that were never in the lending business before, but now they are. And I'm thinking like, what other ways can people with networks that are good at business development, for example, actually find a place that's not in something like lending, title insurance, property management. There are a lot of other facets to this business, and I feel like the big problem, especially from the capital perspective, is finding people that understand how to source good opportunities for that business. Whether it's a operating business that owns real estate or whether it's some other facet like equity deployment, debt deployment, operations deployment.
Well,
there's a big need. Right?
I mean, I think that's a really great point here, is that, what's the type of thing that exists over the long term if there's a shift in the capital, either new capital coming into the business or, capital getting recycled. And for one, I think there's a big shift in the industry. What will undoubtedly be longstanding is asset management. Along with that, maintaining a portfolio, there's always going to be a need for, you have to recapitalize. So debt, loans, all the existing properties out there, they're going to need refis. So, you're exactly right. Lending roles, I think, are something that will be longstanding. Along with that, you have everything associated with doing that, executing that debt transaction, right? You have, title, people in closing, and then from a, maybe the folks that may not be lenders and may not be title folks, on the maybe an acquisitions person needs to transition to being an asset management role, right? Or working with a property manager. There's the underwriting capabilities, like the skill to underwrite the rent on a property is very clearly transferable to underwriting what the rent should be for a new lease up on a property, right?
Yep. Yep. So all interesting stuff. And, I wonder, like, your business, I always been a broker. I always looked at you as a principal. You had, the new Homestead business. You've always had fortune acquisitions. Like, what are you doing in this market to try to figure things out? Like, where does your focus go to as a business owner? That you've been an incumbent in this market for, 13, 14 plus years that I've known you, probably before that. But like, where does your intuition tell you need to actually focus in today's market?
Hey, unfortunately, I think the damage has been done with regard to Homestead at this point. We're not closing up shop, but we're on an indefinite pause. I think as soon as it wasn't as quick as when the Trump tweets came out, but certainly as things progressed and you started to get actual bills with the EO, whatever active conversations I had going on with capital with regard to Homestead, they all just stopped. And it wasn't stopping, hey, we're done, we're never going to talk to you again. It was more like, hey, we just have to wait until this plays out. And it's been an extended enough period by now that how I view just running a business is that we just have to go to the sidelines for a while and let the stuff play out. And it probably will end up having to be kind of a relaunch at some point if it makes sense. But really watching the market and seeing how this all plays out with regard to new capital investment, where that shifts my focus is that, it's just back where it has always been on our existing clients. And, Fortune Acquisitions has been our, largest primary client. Conatus Real Estate we're a consulting business. Fortune is a consulting client. And so, really Fortune is faced with all of the same things that you're talking about. A lot of it comes down to transactions. We do have an asset management portfolio that we're working through. And, that's actually, it went from a period when we were navigating interest rate change, where that was probably the most challenging part of the business. That's now the easiest part of the business.
Right.
Surprisingly, we're getting some real positive things happening in some markets that you just wouldn't expect. A place like Chicago has been a very challenging market for a long time. We're getting some really positive sales, things happening on properties that we own in Chicago.
Explain this to me, because what I hear you saying is, like, one business, Homestead, was dependent on raising capital from investors that, because of whatever situation in the market, those people are harder to get to commit capital. So you shifted to Fortune Acquisition, which is more transactional based. And it sounds like you're finding success and finding opportunities, but they're more nuanced. They're in a particular market, like Chicago, you said, in a particular asset class. Is the deals that you're finding on the Fortune side the ones that you think actually have legs because there's something special about that individual deal, or there's a special circumstance that makes you believe that this particular one might not be scalable, might not be ubiquitous, but this particular deal is a good one to focus on, and then you kind of go headlong into focusing on just that deal? Is that kind of the mode of operations that you're going through right now?
Right. And, I think you're pointing out a distinction that we talked about before, is that there's a different calculus for existing capital in the market versus new capital. I think the risk associated with new capital, it's all but saying it's just not worth it right now. I think the existing capital, they're already in bed with the risk. And so it's much more about how do we find the opportunities? It's what we're doing a lot of right now at Fortune is working to figure out what the opportunity actually is. Some of those sales that we have, right, they were, kind of some legacy homes that, maybe because of one reason or another, difficulty working through permitting in Chicago or other things, we're now ready to sell them. And we've had these really positive surprises where there's a lot of demand we just didn't expect was there. And, perhaps it might be even, giving us a value for how the market views having gone through that permitting process in a place like Chicago. I think other places, it's really about trying to match existing capital parameters to the opportunity that's in the market. And I think we approached this with the, basically like a thesis, I guess you'd call it, probably similar to what other people have in the market today, is that there should be discounted opportunities. There's not an active set of buyers, but what we're seeing is something very different. And so I think that we started with this really high hurdle because we thought that, hey, the market's shifting, we should be able to get these discounts. And what we're seeing is that we're competing with these local flippers and small investors that and it's very market specific too. Like Indy, people are buying homes sight unseen, which seems kind of wild to me. We're missing out on opportunities because people aren't even walking a house and they're bidding up over list price. Some other places like Houston and Florida, like Cape Coral, we just won't touch. But, a place like Tampa, Orlando, we have I think that there is opportunity there, but because of the potential, downside and we're not quite sure we've kind of hit the bottom there yet, we have an additional layer of risk there. Same thing's happening in Houston. And so we're also seasonally, we're also in the strongest part of the market. So we don't want to get too aggressive in trying to get after deals when the entire market and, owner occupants are really, coming to the market in the strongest form.
I think it's similar because you're focusing on something that's very nuanced and you're going, like you said, back to basics. In any situation where I'm having any success right now, it's like a very specific situation. And I've been mainly focusing on builders and developers lately, where I know that if I find a deal where a builder, for example, has built a community and they're really cash strapped or they're afraid of going to retail because the pace of sale is a lot slower and they're willing to take a 20 or 25 or 30% discount just to get it off their books. That's a good story. And that's something I can actually allocate or correlate, I should say, to a buyer that's looking for that very specific circumstance. But it takes a lot of time and energy, to find that nuanced situation amongst, a whole sea of builders, some of which are fine going to retail. Some of them are well capitalized. Some of them don't have a lot of debt that's weighing them down. I think, like, from my perspective, like, the opportunities aren't like easy to spot, but they're everywhere. If that makes sense. There's always a builder is in distress.
What's like the impression of talking with the builders and the things that you work with? What's their view on retail right now? Because I think I'm seeing some positive things happening with retail, but obviously I think a lot of the builders that were starting to increase the supply because they're, increased exposure to build for rent and things like that. I do hear that builders are backing off new supply, but it seems like there's some strength in retail. And one of the reasons that I'm asking is that from a buyer perspective, when I see a build for rent deal come to us today, the first thing that goes through my head, if it's not obviously, it wasn't designed specifically as a build for rent deal, like the first thing that goes through my head is that, hey, this is a failed retail deal and they're just trying to get build for rent.
Right. Yeah. I think the way most builders are looking at, especially regional builders, they built it for retail sale. They underwrote it at what retail sales were back then, which is a much higher pace of sales than they are today. So they financed it according to what they assume would be the pace of sales. Now, I don't think, maybe I'm wrong on this, but I think overall retail sales have slowed, which means it takes longer for a builder to sell that community retail. It might have, they might have underwritten 9 or 10 months. Now they're thinking it's 2 years and they're bleeding money along the way. I think a lot of them look at build for rent as kind of their other option. And the math it seems hard, but it's really actually pretty simple. The math on retail to build for rent is, does it work as build for rent in terms of like feasibility? Does it actually fetch a rent that can support a yield that investors want? What's the price discount if I need to sell it to an investor versus a retail? And what's the time frame that I need to spend selling it to a retail buyer versus an investor? Because it all comes down to that margin. It's like, if you've got to take a 25% discount, well, part of that 25% is your carry costs, right? That you're going to absorb going retail. Part of it's the brokerage fee. Part of it's concessions. So when we do the math on build for rent, retail projects being sold as build for rent, the math is just that. It's like, what's the discount needed? Is there a market there? And whatever that differential is, after you figure out the brokerage commissions, the carry costs, the concessions, what is that number? And is that number palatable to you to be able to de-risk yourself from all those things and get a deal done that's going to sell in one tranche, essentially? And for a builder, it sucks a lot of the time because that number ain't all that attractive at the end of the day. It's most of their profit. It's safe, and it means they're getting out of the deal, but also means they're not making, the profit that they thought they would make if they went to the retail side. Yeah. So I guess the big question is, in this market with people that are playing in the big middle, what wins now, right? What wins now, and what do people do to actually, continue doing what they're doing or making a good living in the market and, have some optimism for the future? What do you think?
I think it's eyes open. Things are stalled, but they're also changing rapidly. From a seasonal perspective, I think that we're shifting to a period that's better for acquisitions. And so especially as you start to get some areas where you might have some high days on market, those are some discounted opportunities. I think, from my seat, it's really about trying to connect those opportunities with capital appropriately. And, from a staffing perspective, really kind of shifting to more, like we talked about, having that, directly tied to revenue. And, I think with any business that's in a difficult, period for revenue, it's, you have to do what is needed to survive. And so that's, lowering your overhead and then trying to stay as focused on the opportunity to be able to move fast, but also with thought. So.
Yeah, I agree, man. I think it's all about precision, alignment, and execution right now. It's not about trying to, be the biggest, do the most, at least for me. I think, it's about thinking and executing more small on a smaller scale, keeping your eye on the big picture, but being okay going granular and going deep with a smaller amount of people so we can get more business done. And yeah, it kills me to say, like, as a person that's been trying to scale and has a growth mindset, kind of taking a look at what can actually be done and focusing on helping individuals or individual companies succeed rather than trying to, save the world and do it for everyone. That's where my focus is, at least. And I don't think.
Yeah. And I think that we've been in a period where partnering with other folks in the industry there's been a lot of value in that. And I think there's even more value today. There's, a lot of us in, similar positions that may not be looking at doing the same amount of volume that we were doing in the past, but, maybe in just communicating more and looking for those partnerships opportunities, we might be able to work together to get deals done or kind of, helping people out of tough situations. I don't know exactly what that looks like. Maybe from a seller's perspective, it's just being open to working with other folks that have other buyers or, really just looking for those partnership opportunities. And, we're all in the same spot. I think we've all are looking to try to, work to survive and, none of us are in this business or coming to work every day just to survive. We all want to thrive. And so I think it's, establishing that foundation and, working to, progress, as soon as we can.
Yeah.
So.
And I think it's okay to look at niches, to look at going and thinking about something that's very special to you, that resonates with you, and trying to find other fellow travelers that can see the world the way you see things and want to walk that path with you and try to figure out a way to make money together. And that's been kind of my bent on what I'm doing lately. Like, who are my friends? Who do I want to work with? Who do I trust? And how do I get deals done with those people instead of going out there and trying to, blow up my network and work with everyone? It's more about finding the right people and finding the right situations. So, with that, I think that was a good episode, Ted. What do you think?
I agree, Adam, like always. And just one more closing comment there. We have the IMN coming up in Miami here in a few weeks. And always a great opportunity to connect with everybody in the industry and your friends, and meet new folks in the industry that are future friends. But I think more now than ever, those type of events are so valuable because it gives us an opportunity to get together, talk in person, be real with each other, kind of like how we have been today, and work together to, with our fellow travelers, like you said, push things forward.
And the talent pool as there is going to be crazy this year. I think there'll be a lot of people looking for new opportunities. Anyone that's looking for really experienced people that are looking for the next soft landing spot. I mean, I don't think it's a better time for anyone that's running a company that's looking to expand to get their hands on some real talent. So I'm looking forward to going to IMN as well.
100%. Yeah, 100% on the talent side of it. I think as long as folks are open to being, potentially being a little bit more creative about how we can work together, we are very interested in talking with anybody in acquisitions, and I'm sure you are as well. And it may not be a business to business network that we're working on. It might be an individual to individual network. But I think that's another way that we can work together to create value in this situation. All right, Adam, I think to sum all this up, we're really looking at back to basics. We've got better days around the corner here for us. I think we all just have to stick with it and back to basics, and clarity is around the corner.
I think if you can keep fear at bay and keep working in whatever segment you find interesting and you could add value to, there's better days ahead for sure.